So on this point of oil, the US don't get their oil from the Strait of Hormuz.
We don't, but it's a global market, and a lot of the price of oil that we're going to pay is going to be determined by the global price of oil, because oil is a fungible commodity. It's like water that runs through the whole system. When there's a shortage, it drives the price of all of us up.
Okay, so I've got a graph here showing the price of oil, and you can see, I'll throw it up on the screen. You can see it's been climbing ever since the 27th of February. So this will impact Americans at the pump as well.
Oh my gosh. And the pump already, where I am in Chicago, I was paying something like $3.10 a gallon. Now, the last time I filled up, it was $4.60. It's a bit of a misnomer to think that we can, as America, get away scot-free with everybody else losing oil, and we're not going to pay a price. Now, to be clear, we will have supply of oil. The price will go up. This will increase inflation. This will probably increase bond prices over time.
What's a bond price?
The bond is the loans that essentially any corporation, companies, or the University of Chicago takes out to borrow money to operate. So the University of Chicago borrows, has 10-year bonds. This is essentially we're borrowing money, and then we have to pay back that money plus an interest rate. That's what the bond rate is. It's an interest rate on borrowed money. Well, if that interest rate goes from 4% on a 10-year bond to 5% or 6 or 7%, the cost of the interest just goes up massively.
And everybody will feel that in various ways.
The U.S. government, right now, the biggest budget item in the U.S. government budget is the cost of interest for the debt of the $40 trillion in debt. We're going to have to shrink Social Security. You're going to have to shrink Medicaid. This is not notional, Stephen. Iran and Russia together could have a tremendous impact on America's economy. This is the real thing.
So with your balance of power analogy, this is where we could get to.
This is where we could get to with the next several years. I would say probably 2 years out. I would say that America has an edge, and I'm trying to depict it as it's like about a 25 or 30% edge from the combination of China and Russia today. And China is gaining, but still, it's actually slow year by year. So you'll see a little bit of an uptick. So maybe I'm trying to depict from, say, a third advantage for the United States to maybe 30%, 28% in the next 4 or 5 years. You add Iran to this, and then especially these combinations I'm describing where they can do things together. Now, in the next several years, you're actually talking about the scales where these three are stronger than America, where I'm not talking about just America's losing it incrementally. You're getting abrupt changes in the world balance of power.
So what happens now if Trump just pulls out?
This is the world. Iran is an oil hegemon in the Persian Gulf. Within a year or so, they're very likely to have nuclear weapons. I'm saying the pro-democracy movement is going to be pounding the table to get nuclear weapons. They're going to want to deter any idea from Trump of hitting them again. And then I'm saying beyond that, you have the possibility of Iran and Russia deciding to cooperate here to strangle and coerce the United States. And if the United States doesn't kowtow to them, then they can pull that oil off the market.
So